This is how to think like the 0.01% when it comes to stock and asymmetric bets. Now, you need asymmetric thinking and a risk management framework. As always, this is your starter playbook. Build a strong base. That is, do not chase moonshots without a cash flow floor. Protect against drawdowns. Start small, find opportunities with 5 to 10x upside and size them at 1 to 5%. Venture deals, deep tech, pre-IPO opportunities, private secondaries. Use the barbell strategy, that is heavy on safety, light on high risk or high reward. No need to do 50-50. Just let the asymmetric math do the compounding. Expect to be early. Asymmetric bets look crazy until they actually work. The 0.01% are comfortable with being misunderstood. The few, as always, the few will always win no matter what happens in the economy with this. Now, this is not luck. It is not timing. It is a discipline, a structure, a system. Asymmetric bet is one strategy that runs through hedge funds, family offices, sovereign wealth, and billionaire portfolios. If you want to know more, keep watching. If you do, you will know how to stack these asymmetric bets and why it is the most powerful move in modern capital strategy. This isn't gambling, it is how dynasties are built. So let's begin. Now, most people take linear bets, that is, invest $1 to make $1. Take $100, 100K risk for a 100K upside. That is symmetry. But if you look for bets where the upside far exceeds the downside, then you think rich. Asymmetric risk is limited downside, unlimited upside. Simple as that. Classic example, invest $1 to make 10, 50, or 100K, $100. It is not just about hitting home runs. It is about having the math on your side. When the losses are capped but the upside is exponential, you only have to be right occasionally to change your life. Billionaire capital allocators evaluate every opportunity through 3 asymmetric filters. Skewed payoff profile. Can I lose 1 to make 10? They hunt for convexity. That is when or where returns bend upside, not linearly. Low probability, high consequence. That is, think VC, early stage tech, geopolitical shifts, space tech. It doesn't need to be a 90% chance. If the 10% wins big, then it is a bet worth stacking. Capital efficiency. Can I risk a small percentage of my capital for a disproportionate outcome? They don't go all in, they go wide and surgical. This is not YOLO, it is position sizing plus payoff math. Now, here is the core. It is not just one asymmetric bet, it is layers of them stacked methodically, and I will break it down. Here we have base layer, that is yield plus safety. Here we have treasury ladder, muni bonds, private credit. This generates stable cash flow, protects principal. Think foundation, no upside play here, just cash protection. The middle layer, moderate growth, real estate infrastructure, quality equities. Here is steady returns with lower volatility, small asymmetric characteristics such as rezoning upside or even energy arbitrage. This is the wealth growth engine. And here we have top layer, asymmetric bets, early stage tech, defense, AI, space, energy, venture funds, emerging market dislocations, distressed assets during downturns. These are often small allocations with the potential for exponential gain. The goal here is cap downside, let upside run wild. 5% of the portfolio. But if just one hits, well, it pays for the entire stock. Let's look at a few historic asymmetric plays by the 0.01%. Peter Thiel in Facebook invested 500K for 10% stake, turned into billions. Downside 500K, upside multi-billion payoff. George Soros, British pound short, risk capital to short the pound in 1992, made over 1 billion in a day. Downside finite capital, upside nation scale arbitrage. Energy infrastructure in 2020, billionaires bought distressed pipelines, LNG terminals, solar credit, 3 to 5x gains as the markets rebounded. Defense tech in pre-conflict periods, allocating energy to cybersecurity, early to cybersecurity, AI, draw networks before defense budgets explode. Each of these were high conviction asymmetric bets layered on top of capital foundation. The smart thing is the ultra wealthy don't play for more, they play for multiples, where the payoff justifies the pain. Asymmetric bet is the bridge between safety and fortune. Start correctly, they create the kind of portfolios that survive winter and explode in spring. So don't just chase yield, don't just follow trends. Think in upside asymmetry, play in calculated extremes, stack bets the world thinks are impossible. That is how the 0.01%, that is the subscribers of this channel, get wealthier in every cycle. If you want more capital strategies like this, subscribe and share with someone who is not afraid to think big. And I will see you in the next one.